What's up, what's up, what's up, everyone? All right, live here, live there, fantastic. All right, let's give it a couple of minutes for everybody to get here. And let's see what we got on the calendar. Calendar doesn't have shit. Obviously, the big news was last week with the Fed's funds rate, right? So we have some bullshit tomorrow. Well, final GDP, not complete bullshit, but it's, you know, this is gonna Friday is gonna be more important. So the PC will be dropping or comes in line. I think the markets will keep on rallying. All right. So the main topic of today is how do you trade? Let me remove the calendar. How do you trade when something has moved a lot? So, for example, if you look at gold, right? It just up, right? So unless you've entered it at some point, yeah, most likely a lot of people already took profits and they're not in any of the trades. How do you enter these trades, right? Because the only good answer is you have to be patient. When you have a strong market trend, which obviously gold has been doing for 2 years now, you can see that it respects the moving average cloud. It also once in a while gets these deep pullbacks, right? But most of the time, if it's a runaway market, after a huge consolidation like that, it's really, this is very overbought. Very overbought. You know, the RSI is overbought. Everything's selling overbought. The prices are way far away from the moving average cloud. So you have to wait for the prices to get back to reality. And what is the back to reality level for me, for example? For me, back to reality, if you look at the daily here, this would be the daily order block right here, right? This is the daily order block, the ICT method, okay? In the before ICT come up with these bullshit order blocks, and order blocks are not that, by the way, but that's for some other time. Anyway, if you take a look at the 4 hour, that the same order block is this, and it's called breakout point, previous resistance. All right, this was basically the previous top, right? We broke out, and we want to have a retest of the previous support. Resistance now turns support. That's all it is. So, you know, retest of support, or in ICT language, it will be retest of the price will go into the order block and then reverse and go into the direction. But the principle of that you can call it fucking monkey shit if you want to. The mechanics of the trade is the same. So don't get hung up on these fucking new and improved terms on how to trade. It's basic support resistance, fucking retest of the previous support. Resistance turn and now turn support. That's all it is. It's a retest. And that's why I keep fucking hammering breakout, retest, continuation. Breakout, retest, continuation. Yesterday we did a fantastic interview with one of our founder traders. Within 1 year, that guy accumulated a lot of knowledge. He takes only a few trades a week, only when high time frames, 4 hour charts allow him, when the price gets to the pullback, he trades only gold. And he only trades basically breakouts, retests on the breakout, and continuation patterns. And he's doing fabulously successful now. Okay, after 1 year, 1 fucking year. That's always I say, about a year. It takes about a year, but that guy wasn't dynamite. So watch out for that interview. It's gonna come out, I don't know, a couple of days, and you can learn a lot from that interview. 1 second, let me hop on the. All right. 1 sec. All right. So, and that's it. You know, he said in the month of September he only took 4 trades. 4 fucking trades, but they're all profitable, and he made money. He got payouts from it. All right, only 4. How many trades did you take in September? And how many payouts did you get? Right. So he is able to trade nicely on a large account and make a 1% gain. He took four trades, 4% gain. Again, on a, let's say a $100,000 account, that's $4,000 in his pocket, just taking four trades in 1 month, sitting on his ass, doing. It's not nothing. It's actually, well, it's very hard to do what he does. Very hard, because how many of you can take only 4 trades in 1 month? Because you're going to cherry pick best of the best, and they're going to work out most of the time. They're going to work out, right? Meanwhile, majority of you, and I was a shithead just like you when I was your age, so to speak, and when I just started, I would take 5, 7, 10 trades a day. It's just a lot of wheels spinning in one spot. You generate a lot of brokerage fees, this and that. On one trade you make money, on 2 you lose, on the fourth one you make money again, and blah blah blah. Maybe you're, most of the trades cancel each other out, and maybe you're profitable. But you do so much work for, if you would only remove the 70%, 80% of the garbage that you take and leave the good ones in, you're gonna be 10 times more profitable. All right, you'll take less trades, less stress, less headache, and you essentially, what we discussed at the interview yesterday, less is more, So through a process of reduction, you reduce all the garbage. So for example, how do you not become a fat fuck? If you're a fat fuck, how do you become skinny? Through a process of reduction. You stop eating fucking sugars, bread, processed foods, and all this garbage, right? You go to the gym. We all know that. But it's very hard to do that, right? You want that chocolate cake. You want that fucking sandwich with a big, nice, And now, listen, everybody's guilty of that. Everybody wants to have, this is our brain, right? We are optimizing for the easiest route possible to ensure our survival, right? So everybody wants that big baguette with salami and all the cold cuts and cheese and blah, 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 and mayo and But if you're weighing, 300 kilos, 600 pounds, this is, you can't do that shit. And if you're a losing trader and you're taking 17 fucking billion trades a day, which bring you nothing, maybe you should put down the shovel. You're digging your own grave. Every fucking day with all your work, you're actually doing more damage than if you would do nothing. Obviously, we're not here to do nothing, but we're here to be more efficient and do things in a obviously more intelligent way, right? So a more intelligent way is simply doing less of stupid shit, right? And do more of good stuff. Very simple. I know, fucking mind-blowing advice over here, but it's often the most obvious and most simple, and that's what works, and that's what's true, right? A lot of you think the answer is in finding a new and shiny trading technique, right? So you go from this teacher to that teacher, to from here to there, which is fine in the beginning. You have to experiment, see what sticks, what doesn't stick. But the process is the same. You reduce. So if at first everybody starts with 3 billion things on their charts, right? And then you slowly take all these fucking indicators, all these fucking things away off the charts, until you most of the time just, I just look at the naked price with a few lines here and there and my fibs. That's it. That's all I need. I don't really give a shit about anything else because it works. So if it works and I can take 20 trades or 15 trades a month, that for me, that's enough. And if some months it's only 5 trades or 10 trades, so be it. But my hit factor is 80%. I'm 80% right all the time because I sit and wait and I make sure that I get in a trade that actually has very high probability of working out because of the pattern, right? Meanwhile, a lot of novice traders, they want action. I'm not here for the action. All the action has been beaten out of me with a stick by the market. That's all, so all that shit is gone. I could care less about the action. And another thing that we discussed about, wait, camera delay. One second, guys. Oh, the camera delay shouldn't be happening. Should be good. All right. Sorry, I was just doing some technical bullshit. All right. So the less is more, and we've discussed an interesting aspect, how he deals with his itch. Everybody gets an itch, meaning you're sitting, it's a boring day, you want to trade, or there's no setup, no A setup, no A plus setup. What do you do, right? What do you do? If you're itching, instead of entering trades on your live accounts, your big accounts, get a $100 account, get a $1,000 account, you know, get a tiny account, do a demo, and just play out the scenarios there. You really want to take this trade. You know you shouldn't, deep down inside, it doesn't meet all the criteria exactly, but you want action, right? You're like the puppy, right? So if you want that action, take it on the secondary account. Have a secondary account called fuck around account and do all the bullshit over there. So that way you can scratch the itch. The way I scratch my itch, well, before the demo days and all this bullshit. What I used to do, I would go to a casino on the weekend and blow off, $1,000, $2,000 just to get that shit out of my system. You know what I mean? I would be in Vegas, I would be Atlantic City, which is not far from New York, right? That's the closest casino you can play at in New York. And on the weekend, I would just go and blow off some steam there, because that way I can get that gambling itch. Scratch that gambling itch, or get that gambling bullshit out of my system, get it out of my system, and then I can trade normally on Monday, Tuesday, Wednesday, Thursday, Friday, more likely Tuesday, Wednesday, Thursday are the best days. That's when I would want to, I can concentrate on trading and executing like a machine. I don't have that itch anymore, because I had a couple of drinks Saturday night. You do the gambling routine. You fuck around. Maybe you win, maybe you lose, but you don't care. It's with your fuck around money. Do the same thing now. Do the same thing, but with a secondary trading fuck around account. It will help you tremendously with your trading. I promise you that. All right. So, how do you enter now? One second, guys. All right. So there might be a delay on X. I don't know why, but pain in the ass. All right. Anyway, so how do you approach this chart, right? So obviously we've been consolidating for like 6 months, a little less. And now we have an explosive move out. We will retest this high, I can guarantee you that. But when that happens, I don't know yet. But when this breakout happened here, daily. When breakouts happened here, right? We also ran. Then another try attempt. We retested it. Posted a reversal candle, right? And then off we went. Again, retest of the moving averages. Same principle. Same thing here. So sometimes it goes a little, it's not exact. This one was an exact one. Sometimes it goes a little deeper, but it was within the same day. You saw a reversal in the same day, right? Sometimes we don't get it. Sometimes, it runs away like you did here, right? So there's two scenarios. We got a deep pullback, but for that we'll need some kind of catalyst. And for now, the catalyst is for gold to keep going up. There's no catalyst unless China stops buying gold, which it has been accumulating aggressively for the last 5-7 years. All right. So it keeps accumulating, especially it ramped it up last couple of years. So it's ramping up. People want to de-dollarize that, or at least not, if not de-dollarize, but they want to at least have gold reserves as a secondary option, as a plan B. And if in case, again, gold has been around for more than for longer than Jesus, all right, or Muhammad or Buddha or whatever you want to pick one, right? And there is a reason for it. It was a monetary system 5,000 years ago, and it still is. So you can't beat that fucking track record. There's a reason why gold is gold, and it just because you hear some fucking retard on TV telling you, yeah, gold is a passé, it's a old relic, and he's selling you bullshit because he wants you to use the toilet paper, which we call money. Meanwhile, the real money is real money. That's why China and Russia and France and everybody they're buying gold. The net buyers, their central banks are converting their shitty fucking toilet paper into gold. That's why you see these price actions. So, how do you enter these price actions? Again, whether you call this an order block or a breakout, retest, continuation, or mumbo jumbo donkey shit, right? It doesn't matter. So we fibbed the last leg up. I don't know if this is the top. It can obviously do this, another breakout, continuation. Maybe you can buy here. That's a super aggressive move. So make sure your stop losses are here, right? Or it can dwindle down. Ideally for me, I like my deep pullback fib zone, which lo and behold coincides with the fucking daily order block. So if we get in a few days, we get here, we post one of these fucking candles, and then we go up, right? We take out the candle's high. I'm going to buy this. I'm going to place my stop here or below 786 and target these highs or higher. That's what I'm waiting for. The same fucking setup. I'm just reading some questions. The same setup I've been fucking talking about here ad nauseum. So whether it's a breakout retest continuation, retest of the support of resistance turn support, or order block retest, whatever, it's a retest. It's the same mechanics. It's the same principle. So which language you use? You use smart money or dumb money or retarded money concepts. It's the same fucking concept. As long as it makes money. It just talks about the same phenomena in the trading world, right? So anyway, right now we are kind of like in this triangle configuration. So we can do this and then a breakout. We'll see. Like I said, I want to see if this might be a nice intraday on a 15-minute time frame trade right here. But markets need to overwork this overbought condition. This is overbought. Obviously super bullish still, but you don't know if it's going to go to this and then that and then that. So buying here is becoming more and more challenging, right? So you better have some kind of setups. Like I said, one of the setups would be breakout from the triangle with a retest though. I want a retest because it can be a fake out and then a drop. So I don't want to be faked out. I want to see a solid candle posted breakout after retest. Because now you have to control the risk. How do you control the risk? You control the risk by realizing, by containing the possibilities of the downside, right? What can happen? How can I prevent the majority of that not happening to me? Meaning losing fucking money, right? So one of the ways I can mitigate and increase my hit percentage is by, instead of just trading a breakout, I wait for a retest and then I buy here. Okay? Because then the market is confirming that there was a legitimate breakout. The algos took the profit that drove the price out to grab the liquidity above these highs here. They take profit, and then the real buyers come in and drive the price up. You have to understand psychology behind price action. And not just be, oh, this is a stick. on the screen, right? Buy or sell. It's a red. If it's green, buy. If it's red, sell. You know. If it works for you, it works for you. But that's how you approach markets that are trending. They're hard in the trend, but even trending markets, again, see, this was, you look at the 1 hour, it's a 55 EMA. Every time it approaches to 55, it kind of, jumps up. So we are a distance away. The moving average needs to catch up. So I think we can do a few more of these. And PCE numbers on Friday will probably provide either this or that. All right? Or Thursday. What was it? Thursday. So that's kind of the what I'm looking at when it comes to trading heavy trending markets. So this is I'm gonna wait for a breakout. I need a breakout retest and continuation here. Ideally, a plus setup would be this cluster here because it coincides with the order block, if you want to call it here, right? So it's the same. It's just a confluence that, ICT traders will be looking at that. Technical analysis, classical technical analysis will be looking at that. Everybody's going to be looking at that because it's the same fucking area, right? So that's good. That means there will be a reaction, and if there is a reaction, when the price starts moving in your direction, you can lock in the price, take half off, put a stop or break even, or move your stop up to de-risk it, right? So you can get a break even trade or a small loss trade to catch the runner. Okay. All right. So that's gold. If you guys have any questions, let's take a look at some questions. No money, no reputation, $500 cash, or $10,000. It's an easy. You cannot turn your $500 cash or $1,000 cash into $1 million. It's bullshit. It's total horseshit. You will not do it. Trust me. It's a waste of time. It's a lot. The whole principle of trading is this: you have $1 million and you make 50% on it, $500,000. What does Warren Buffett do? He has, I don't know, trillions under management? I don't know, right? What does he do? He's famous for having 25 to 26% return year after year. 25, 26. So he has $1 billion, let's say, and he produces 25% on it. And he is considered the genius because he's been doing it for 60 years, right? Every year. And he compounds it. Same thing with hedge funds. You're making 20, 30%. There's a reason if they wanted to do 100%, 200%, 500%, and they would do it. But the volatility would be such that a lot of these hedge funds would fail. And most of the hedge funds fail even trying to produce 20, 30%. And here you are trying to produce 1,000, 10,000, 100,000% return on your $100, right? How do you turn, what's the percentage of turning 1,000 into $1 million, right? So the return percentage is unrealistic. So start thinking like smart money and realize, get an account with your $500, you can get a $100,000 account. Or if you're not that skillful yet, get $25,000. Get 4 $25,000 accounts, 4 of them, right? Wait for some fucking discount. By the way, per 30% off right now on new pro accounts, right? What are pro accounts? I call them do whatever the fuck you want account. There's no more. We're not watching over your shoulder. You wanna be a risky trader. You wanna trade the. No, there's no consistency score anymore. There's no, you want to risk for large percentage, more than 2%, go and knock yourself out. You want to be out, blow your account in one trade, more kudos to you, or the reason why it's called pro is because some people actually know what the fuck they're doing and they don't want to be constrained, which we understand as well, right? So we have more risk conscious accounts the next gen accounts, and where we kind of help you become a fucking trader and tell you don't risk more than 2% per trade, and everybody fucking complains about it. Like, why can't I risk? Because you haven't been in this fucking business long enough. And I've seen there's majority of professionals don't risk more than 2% per trade. Okay? Because it's you simply once you start risking more than 2%, you just everybody goes into a drawdown at some point. And you have 5-6 losers in a row, and you risk 5%, there goes your half of your account, almost, right? You're never going to recover, especially when it's not your money. Yeah, I can just restart. It's like playing a video game, right? In a video game, you can die and restart. What about a real war? Are you just going to run around like in Call of Duty, spray and pray everywhere? You're going to die, and there's no restart button, whether you believe in reincarnation or not, right? Definitely not in the same fucking body. So same thing with here. You know, you have $1 million. You have to understand how to manage risk, because if you blow $1 million, you cannot go to McDonald's and work for 2 years and make $1 million again. It's very hard to make $1 million. Not easy. So if you have access to a 100K account, which again, not your money, be smart about it. Anyway, the best option you have right now is forget about turning $100 or $200 or $1,000 or $10,000 into anything. It's a waste of time. You're not going to turn it into shit. You're going to risk too much, and eventually you will blow it, and you'll be, you know, but you still have to pay rent, you still have expenses, you still have to take your girlfriend out, blah, 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 right? You still want to buy yourself the hat, bag, pen, car, whatever the fuck you need to buy. So, using prop firms is the best option for you. Hands down, it changed the way a lot of retail traders can make a living. Difference between a fake move and a real move. You wait for a candle to close, number one. Number two, so that's what I was trying to explain to you here. What would be a fake out move? A fake out, an undisciplined trader sees this candle like this. It's a full candle, full body candle like this, right? But it hasn't closed yet. And he's like, okay, it took out this top. This is a breakout. We're going to keep on running. A disciplined trader knows better. Just because this candle looks like this right now, in 30 minutes, it can look like this or like this, right? So you always wait for the candles to close. That's on the higher time frames. It's, right? And better yet, you also, a double confirmation is when you have a pullback into the retest of the zone, and then you have a reversal candle around there, and then it takes off. So breakout reaches. This is the best solution I've found in 20 years to be right more than wrong, all right, in trading. Yes, it requires discipline. Yes, you sit on your hands. Yes, you miss a lot of moves that way, but you still make money. Because you know what's the other opposite of that? People who who are not disciplined, they simply lose a lot of money. And then they have no money left to fucking, when the actual move happens, to do anything. So I'd rather not be in the market and wait. 1 second. I gotta buy stock. 1 second. Ah, shit. I was long Alibaba. I closed it a few days ago and still keep on running. 1 second. I think we got the stock market open just now. Let's see what's happening. In a sec. Baba. Gonna right here retest. Was long from like 70s. Been long for a while. Closed it a few days ago at 150s, high 150s, I think. Gonna rebuy once we get a little lower. All right. Anyway, so let's take a look at the S&Ps. Nothing has happened. So, what do you see happening here? Nothing. Nothing is happening since London Open. This is London Open. And then this. So now you have to wait for a breakout, the retest continuation in either side, and that's what I'm going to be trading, if I would be trading, because now you have kind of like this consolidation going, but then maybe there's no catalyst. So if there's no catalyst, there's no news catalyst until tomorrow, then most likely you're going to get fake outs on these days. So that's why I want to wait for double confirmation with the retest and continuation. All right. All right, let's see other questions. What's your long-term vision for the firm's role in evolving prop trading landscape? Great question, thank you. Long-term vision is to, first of all, the same vision I when it started, right? When my first video I posted about Funding Traders 3 years ago on YouTube, you can go and see. I said basically most firms back then would just say, okay, show us how you trade, and then you do your thing, and leave you to your own means, and most of you fail, right? And our difference was always, I don't want to just give you a bunch of money for you to trade on your own. I want to ensure you're a success. I want you to be successful, because if you're successful, I can copy your trades on a larger account, and it makes me money. So it's a mutually beneficial relationship. And I can only do that better through education. That's why I'm I'm spending my time right now talking to you guys about how I trade and how professional traders trade. And a lot of you here are for giveaways or jerking off or whatever reason. But a few of you that will listen and will implement those trading techniques and will, or find their own ways of trading, but will find these materials helpful, will ensure that, well, hopefully you'll be thankful and join our party, right? So, and if not, you're still going to be profitable and successful, which again, good karma for me, and rich you know what I mean? So either way, it's a win-win for me. That's why I keep doing these things, and I've been doing it since day one. And not a lot of CEOs come on these. First of all, not most of the CEOs that you see, they're not traders. They're bullshit artists. A lot of them are honest enough not to even start educating anybody on anything, because they haven't traded successfully. So they cannot even tell you anything about trading. Okay, I have a 20-year track record, right? So I can run my mouth. I can teach you something if you want to. And that's why we're here, because we want to. It's for me personally. I like to see young people, or people in general, be independent. I want people to be independent. I want people to not be, slaves to the system. And this is one of the very few vehicles that allows people to become successful on their own terms through a lot of hard work. Yes, it's not easy. But that's why escaping slavery is not easy. If it would be easy, everybody would be doing it. Nobody would be a fucking wagey, right? Nobody would be a wage slave where they sit in the office and they have to come to a place where they hate to be, they don't want to be there, to listen to some asinine bullshit from corporate headquarters about fucking HR meetings and some other bullshit like it's a kindergarten. Zero respect, zero fucking anything. It's just like, to me, that's a nightmare existence. Nightmare. And the more people I can fucking help avoid that, the better I feel inside. Okay? So it's a pure selfish reason, but out of love. So there you go. All right, next question. What's your current outlook on the market this week? Any sector standing out to you? Well, again, everything is rallying. I've been explaining to you why everything would rally, why Nasdaq rallied, why US 30 rallied, right? It's 15 minutes. This was the I mean, it just keeps on rallying and rallying and rallying. And by the way, oh, looky here. Oh, what was this? Ooh, wow. A breakout and a retest and a continuation. Woo. Right? So, again, this is all I do. Breakout retest. Not all I do, but this is all you should be doing for now. I do trade against the trend. Once in a while, in one of the lives, I did tell you when I was short in gold against the trend, but usually that's not advisable, and markets have to be overstretched, and there has to be a few criteria. For that trade to set up, and these criteria are not there yet. Shit. Showing Telegram again. Fuck. Yeah. This is, look at this. This is Dow Jones. This was the ceiling, a breakout, massive candle breakout. Instead of buying at the top here, smart money waited here. They have a, what is this candle right here? What is this candle? The fucking thing I draw all the fucking time. This stupid fucking candle I draw, right? What is this? Is this not a goddamn reversal pattern I keep fucking yappering about? I'm literally giving you tools. You wanted to see every fucking live. I show you example after example after example of the same fucking setup that I take that makes me money. All you have to do is just dumb fucking follow the fucking protocol, and you'll make money. There's no secret. You don't need to secret because it's hard enough. Anyway. Yeah, so with stock market, let's see. So the question was, what's my current outlook on the market? So the current outlook on the market, everything is a little bit overstretched. Obviously, the breaks, sometimes breakouts don't breakout. The pullback doesn't reach the breakout point. So it did on Dow Jones. So you take the Dow Jones. It didn't happen on Nasdaq. So fucking beat. All right, but you know where it happened? It happened here. Almost, right? Still almost a retest, a reversal candle, and more out. So what do you do next? Wait for another retest, and you need to have another pullback. I would wait the pullback towards this 55 EMA. I want a deep pullback at this point because this is overstretched. So if you feel a leg like this, for example, see at least 38.2. So if this is the top and this is the bottom, I would at least want it to retest this 38.2 or this previous high here one more time. So this is the outlook, because chasing up here is kind of difficult. It's unreasonable. We're literally inches away from all-time highs. Every other day we post an all-time high. So it's not easy to you have to be patient now. Chasing up here is dangerous, okay? Because you don't know when a violent reversal will happen, and you're gonna get stopped out for no reason. So that's why I'm just gonna wait and be patient. And my like I showed you, this is the intraday 15-minute setup. If we break out, we put a breakout retest continuation to 50-minute. If a little longer term, 38.2s. Obviously, ideal is the 618 to 786 zone. All right, that's the outlook. But nothing has changed. So again, gold will keep on going up. Stocks should keep on going up because Fed will be cutting interest rates. Okay, and if inflation increases and Fed doesn't cut interest rates, it doesn't matter. Sorry, guys. Oh, there we go. So if the Fed doesn't cut interest rates because inflation starts rock and rolling, gold is still going to be rocking up. Why? Because it's an inflation hedge, right? The value of the dollar will be plummeting, so the value of the gold will go up. in terms of dollars, right? Because of the dollar devaluation and the hedge against the risk. So gold is probably the best vehicle to trade still. Just buy the stupid fucking dip, as they say, BTFD, and you can make a shit ton of money. Okay, so all right, that's the outlook. Let's see. Funding trader consistently been the performance but avoids max drawdown. Is the firm approach supports coaching or straight determination? Well, if you're underperform but avoid max drawdown, that's a good place to be, and that means you have to tweak a few things to become profitable and become a successful trader. That's actually a very good spot to be. And we look, everybody goes through 3 stages. First stage, you do the demo account, and 1 second. All right, yeah. So 1 second, guys. 1 second. I just saw something for my real estate portfolio. Oh shit! I own properties in downtown Miami, and DeSantis, the governor, just announced that he's going to be giving out land for Trump's President Trump's presidential library. After U.S. presidents serve their terms, they open up libraries at locations of their choice. But so if Trump opens one up in Miami downtown, my property's value will skyrocket. All right. Anyway, what was the question? Yes. So a trader goes through 3 stages. Demo stage and losing money. Then they put up the money in the brokerage account. They lose. Then they get sick and tired of it. They actually start taking this shit seriously, start learning, absorbing all the information from YouTube, paid courses, books, and whatever else, or friends teaching them, right? That's when they become to this, they start managing risk in a better way. And this is what this question is about. See, he is consistently underperforms, but avoids max drawdown, which is a good thing. That means you're learning how to control your risk. You're very close. The stage 3 is profitable stage. A lot of people don't, they just stay at stage 2 because they are too lazy to have a journal. What separates people from stage 2 in stage 3 people, stage 2 people get so sick and tired of being in that stage again. They start monitoring, meaning recording, journaling their trades, and then they start removing through a process of reduction rather. They remove the 30-40% of the shittiest of the shittiest trades, and lo and behold, they become profitable. So you already have the winning trades. What you need to do is get rid of the losing ones most of the time, when you're in that stage, okay? And you will be successful. You don't need to buy some stupid course. Just tune in here for knowledge for a person who has experience. And thank you so much. I really appreciate it. You don't need to buy any courses. Everything is available online for free. Not only from me, but there's plenty of great traders. In fact, the less viewership they get most of the time, because nobody wants to listen to technical shit. You understand? Everybody wants to have, I'm going to be, listen to these fucking clowns on YouTube who are 22 years old. Nothing against they being 22. I was 22 at some point too, right? But all they show is the Lambos and the fucking, popping bottles, doing dumb shit for the clicks. And you all retards are falling for that. And then I know personally a bunch of traders with 20, 30 years under their belt, and their YouTube channels are, get a couple of hundred views, right, per there. Because why? Well, because they're traders. This is not exciting. You talk about technical skills and how to enter trades, how to exit trades. There's nothing exciting about it, as in, some idiot fucking doing donuts on a Lambo, right? But are you here to be entertained, or are you here to make money? If you want to make money, watching videos of idiots flaunting wealth that they accumulate through selling you bullshit is not the answer, to me at least, right? So if you find these senior guys, everybody, you should not listen to most traders who are under 30. Most likely they don't know what the fuck they're talking about. Especially if they're 22, 21, 18. Sorry. You just don't have enough experience. I can give the stupid same fucking example. Would you trust a 22-year-old heart surgeon to perform open heart surgery on you? Or your mom or your dad? Would you trust that person? Or would you pick somebody who's 45? Or 50 or 60, whatever. Right? So why would you fucking let some schmo lead you by your nose like a donkey by showing you, oh, look at my watch, look at my car, look at my this? The fuck are you actually showing how to trade? Are you teaching details how to trade with, and not just bullshit and call trades live? I call trades live every time on my channels. So if I fuck up, everybody sees I fucked up. I don't show you post factum. Oh, look at my P&L. Look at me. I'm a genius on the fake MT5 account. Right? So learn how to trade. The smaller the usually the better traders are less known, and most of them they have some age behind them, so to speak. Right? They're not 21. 18. Would you trust a 15-year-old accountant? Right? Would you trust a 15-year-old accountant? No. So, come on. Stop fucking buying bullshit. Into bullshit. So yes, find guys who are, who look like they've had something under their belt, right? Because you see that even after a year, it's very hard. This is a very hard business. So if somebody is super young and they're telling you, I'm a goddamn greatest fucking trader I ever lived, what are the chances of that, right? Especially if most of his Instagram is him popping bottles, banging hoes, and driving rented fast cars or whatever. Or he even bought them, whatever, leased them with the money that you send him through brokerage fees or fucking selling you courses, right? If he is busy drinking all the time, trust me, he's not a fucking trader. Because you cannot be inebriated and brain dead and trade successfully. Trust me, I've tried. It doesn't work. It might work if you have decades of experience, and even then you shouldn't be trading in those conditions. Okay? So, and remember, everybody can get lucky for a day or a week or a month, but it's a long-term track record. It's that counts, right? And if you're gonna be fucking around, if your account is all about you flaunting wealth, first of all, real rich people don't flaunt wealth. They don't need to go. Jeff Bezos does not have an Instagram with a Gucci bag, right? Right? Same thing. Why would a successful big trader be dicking around? Oh, look at me. He's been rich for a while. He doesn't need to be, look at my car. I finally got a car. Look at me. Me. This is just childish retardation of superficial people with very low self-esteem. Okay? And you're falling for these fucking clowns. So if you want to be successful, follow accounts of people who first, they show their face, they show they talk about their track record or their past, how they came to trading. They've been around the block trading. If they have 10 years under their belt, that's when you teach. Again, in the martial arts, are you going to be, listen to every coach? Is not a coach in martial arts is not a young guy usually, right? Not a super young guy. You need to have some years, and martial artists who are very gifted in their young age, meaning in their 20s, they've been doing it since they were 5 or 6 or 10. So they've been at least doing it for a decade if they're 20. No, these clowns are 21. They haven't been trading since they were 11. Okay? Most of them show you, I was a McDonald's worker. I was working for Subway or some donut company, whatever, as you all know. And 2 years ago, and now I'm driving a Lambo. Look at me. You think you learned how to trade that well in 2 years? No. They are lying to you, and stop falling for these type of brain dead scams. All right. All right. So I watch everything. I watch pound yen, euro Aussie, dollar Swiss, oil, copper, indices. You know, you see a lot of stocks. This is what I watch. Doesn't mean I trade everything. I trade only a few selected vehicles in the season. Everything has its own season, and I've been explaining to you. So, for example, during COVID, the inflation, post-COVID inflation, skyrocketed, and one sec, put a weekly chart. You had an explosive move in dollar. This is the time where I was trading a lot of euro, pound, Aussie, Kiwi, dollar Swiss, dollar yen. Why? Well, because the dollar was a dominating trade back then for a very simple fact, because you had Federal Reserve raising interest rates while Europe and everybody else were still at zero, at ZERP. And it was just a layup trade, okay? Once the Europe started catching up, the dollar reversed, and I got off that bandwagon and I switched to gold. You know, gold has not been doing anything, so this is COVID. This is where dollar was ripping. The gold was just being held up because it was still an inflation hedge, just like US dollar. But, well, the dollar was a safety haven, and this was a safety haven too, but because dollar was ripping, gold wasn't going up against it. Then when the dollar, the interest rates delta, differentiation between U.S. rates and the global rates, the gap closed. Finally you had the breakout of the of gold, and I've been trading gold ever since, because it's just right. It's a nice trending market. It's easy to trade with gold, with the trend. Even when we take pauses, you just buy the dips, buy the dips, buy the dips. You just have to be patient, and that's it. And when this gravy train will be over, and it will be over at some point, I'll switch to something else, you know, like the indices, etc. So this is how I look at. This is a new one. So this is has a CFFFT in a blackout. So I'm not blackout, oranged out, same color type of embroidery. All right. So thank you guys. I think it's been an hour. I hope so. Yes, different seasons for different things. Gold is the vehicle to trade right now. It's the easiest one. So don't reinvent the wheel. Just buy the fucking dip. This is the futures. Let's see the futures. So here, the last leg up, you want to trade intraday, wait for the pullback. You see this if we end up day somewhere here today, or better yet, in 2 days we go low somewhere in this zone, buy that. Once you see a turnaround sound, that's it. Let's take a look at crypto lastly. So yeah, looking here. This was this last leg up, right? Where did it go to? Did you get a reversal candle? And this was the manipulation. They popped it. That's why I don't place my stops below the candle low. I usually place it here below 786, because you never know if it's gonna bounce from here or here. It can do it. So here they faked everybody. The reversal candle happened. You go long. if you put your stop right here, they knew the setup. See, they know this manipulation happened because they know this retest of the 786 deep pullback setup, and then off we went. Is there more than 1-to-1? If my stops are here, here's your 1-to-1. More so, 1 to 1.5, and that's what I do. I like wider stops with the reversal signals, and I do 1-to-1, and it works like a motherfucking charm. All right. Oh, fuck me. Sorry. Yeah. All right. So this is gold. This is Bitcoin daily. This is the fib. Right. The last leg up. We fib it, and look, 618 retest of 618. Like this. A reversal candle around 618, right? Reversal candle right here. The reversal candle's high is taken out, and this is why I don't put the stop loss. This is textbook. The stop loss would be here, because the traders know, big traders know that that's the textbook stop loss. This is what happened. The exchanges manipulated the pricing. It dipped right slightly below, as you can see, slightly below. There's right a little peekaboo, and then it went up. So to avoid these manipulations, I've just learned that, not just learned, I'm saying I never put a stop loss below the candle. I put stop loss always below 786, because if it keeps on going below 786, then I'm definitely wrong. The setup is wrong, and we're going down. All right, usually. So I like to have wide stop loss. Again, my entry would have been here anyway because of reversal pattern around 618. Stop loss here. Is there 1-to-1 here? Is your 1-to-1? That's it. Even with a wide stop loss where you can sleep at night and other volatility can happen, right? So that's what I like. Okie doke. All right, ladies and gentlemen, I got other meetings. In 1 minute, I have another call coming up. All right, thank you so much. I'll see you all maybe tomorrow, maybe Friday. 100% Friday, maybe tomorrow. Maybe instead of Friday, I'll do tomorrow. We'll see. I'll announce it, and but I hope you guys got a lot today to help you trade. All right. Cheers all. Thank you all for coming. I'll see you probably tomorrow.